Do you know that there are other profitable investment options that can make you a millionaire aside from stocks? The stock market seems to be the real thing among successful investors, and as a new investor, you often think of it as the sure way to financial success. You hear about the new stock that is generating money for others. You venture into it only to start losing money. Then you keep wondering why you're losing money while others are making money. You see, the stock market can be a profitable investment option if only you know how it works. Truth is, the stock market is not the only investment option for investors. There are several options that can give you a good return on your money. Understanding everything you need to know about the stock market will minimize the risk of losing your investment. Philip Fisher said, "The stock market is filled with individuals who know the price of everything but the value of nothing." He made this quote to explain that investing in the stock market without the required knowledge of how the market works will lead to losses. You must understand how the stock market works, when to buy, when to hold, and when to sell. And that is what this video is all about. New investors end up losing money because they do not know the basics of stock market investing. If you don't want to go through similar experience, ensure you watch this video to the end, as you will discover investment strategies that work for so many successful investors. Stock market investing has to do with buying a part of a company through its shares. Shareholders are entitled to receive dividends from their investments. The amount they will receive as dividends is determined by the value of the company. You must understand how to analyze, evaluate, and calculate the value of a company. The value of a company is determined by what is called market capitalization, also referred to as a market cap. It is the calculation of the current price of a share multiplied by the number of shares the company has. Warren Buffett said, "I don't look to jump over 7-foot bars, I look around for 1-foot bars that I can step over." He was trying to tell investors to stop waiting for everything to be perfect before they invest. Recognize opportunities in the market. Take advantage of that opportunity to build your wealth. Stock investing strategies. There are various strategies you can use to invest in the stock market. They are money market funds, income funds, balanced funds, growth funds, etc. The way these funds operate is different from one another. There is a difference between individual stocks and mutual funds. Different stocks are put together in one to form a mutual fund. Individual stock refers to buying a part of a particular company. However, a mutual fund is a low-risk investment because it is not tied to a particular company. Benjamin Graham invented the concept of value investing and secret analysis. Value investing is the investment strategy Warren Buffett adopted to build his wealth. This has to do with buying stocks at a price that is lower than the intrinsic value. He used this method to seek out companies that are priced lower than their actual worth. Some lessons he shared about investing are: successful investing is about managing risk and not avoiding it. You need to approach investing with a long-term approach. Investing is not gambling, neither is to be based on speculation. George Soros, known as the man who broke the Bank of England, said that markets are constantly in a state of uncertainty and flux, and money is made by discounting the obvious and betting on the unexpected. It is not whether you're right or wrong, but how much money you make when you're right and how much money you lose when you're wrong. Carl Icahn developed another investment strategy of buying stocks everyone rejected. He is a billionaire who has used this strategy to build his wealth. He believed that some company directors were overpaid compared to the shareholders. He would buy large shares from a company and then request a new board of directors. He was known as a shareholder activist. There was always an increase in the stock price of any company he buys. Carl Icahn also believed in the value of investing strategy. He advised investors to look at the long term and not be short-sighted in their approach to investment. He advised investors not to fall for the popular stocks. There are also a few things you need to know as a new investor. Investing in the stock market is all about consistency. You should be ready to hold your investment for a long period as an investor. You should be able to read the market to know when your investment has peaked, plateaued, or stopped sinking. Also, demand is the major factor that affects the price of a stock. When the demand for a stock increases, the price will increase. When everyone wants to sell a particular stock, the price will reduce. You need to know all of this to succeed in stock investing. Robert Arnott said, "In investing, what is comfortable is rarely profitable." Most low-risk investment does not yield much profit. You get the most reward when you take a huge risk. When a company goes bankrupt, an investor can lose his investment. You need to know how to determine if a company has an assured future before investing in it. A company that deals with products or services that will continue to be relevant has a better chance to survive more years. Learning from great investors is also a good way for you to forge ahead in the stock market. Nevertheless, the stock market is not the only profitable way you can invest your money. Other methods have proven to be reliable and risk-tolerant methods of investing. These methods have been used by wealthy people to amass their wealth. Although stock investing is the more popular means of investing, these other methods have also gained ground and they are making a lot of people become extremely wealthy. Bonds. This is a low-risk investment option. It is a stable income-generating investment. It has to do with loaning a company or government money. Government bonds simply refer to lending money to the government. Corporate bonds are when you lend money to a company or corporate organization. The longer you leave your money, the more interest you will make from your money. Real estate. Donald Wren is the richest real estate investor in America. He started when he was only 25 with a loan of $10,000. He founded his company with that money and built his first property. He grew from there to become the richest real estate investor in America. Real estate investment is another rapid method for building wealth. Real estate investment involves buying a property for sale or rental. You can buy an apartment and hold it for a while before selling it at a higher price. You can also rent out the apartment to people in order to generate monthly revenue. There are various ways you can invest in real estate. You do not even have to own a property or properties before you become a real estate investor. You can also invest in real estate investment trusts or REITs. These companies are the ones who do everything that relates to the property while you enjoy the return on your investment. Real estate crowdfunding is another method you can use to get into real estate investment. You can pool resources together with other individuals who are interested in real estate to purchase a property. Peer-to-peer lending. This is another highly profitable investment option for you to grow your wealth. It involves lending money to other people who need it for businesses or personal use. You have to register on a peer-to-peer site as an investor. Your money would be a loan to someone else. Then, you will receive a fixed monthly repayment, which includes some interest. The advantage of this investment option is that the interest you get is more than the standard savings account. There is no bank involved in the transaction. Just the P2P website, you as the investor and the lender. The risk involved is that you are giving the loan to people who might default in their payback. They often opt for P2P because they were unable to get a loan from their local bank. However, if you think you can manage the risk involved, then consider venturing into it. That will be all in today's video. I hope you've learned something new. Never hesitate to give this video a thumbs up and share your opinion in the comment section. See you next time.